So thank you very much for that warm welcome. It really is very good to be here today with all of you. I would like to begin by thanking Dr. Moses Cheng, Chairman of the Insurance Authority of Hong Kong, and Mr. Clement Chung, CEO, for inviting me here today. I'm very glad to be joining you for the second time after last year's very successful inaugural forum, and to engage with so many insurance leaders in the region. It was very important for me to be here today, not only to lend my support to the Insurance Authority and all its very impressive initiatives to date, but also to share my thanks on behalf of the IAIS for, despite being still a young regulator, the significant contributions that the IAA is making to our international discussions, including at the Executive Committee. So I would like to congratulate Moses, Clement, and team. I also appreciate the opportunity to share with you the IIS perspective on fintech developments, representing the various views of insurance supervisors around the world. But before delving into fintech, given that this forum takes place so soon after our own IIS annual conference and meetings in Abu Dhabi last month, it would probably be remiss of me not to mention a little bit about some of the major milestones we reached last month. So 2019 was a significant year for the IIS. First of all, we celebrated our 25th anniversary. And over that time, we really have evolved, if you like, from being an informal gathering of insurance supervisors to being the global standard setter for insurance supervision and an integral part of broader efforts to make the global financial system more resilient. And I think it was a real testament to our commitment to robust global standards that we were able to take so many significant steps forward in Abu Dhabi regarding our contribution to the post-crisis reform agenda. So maybe to run through those. The first of these accomplishments is a substantially revised set of insurance core principles, or ICPs, the go-to reference document, if you like, for insurance supervisors around the world. This brings to fruition a multi-year, broad-ranging review of our supervisory material. We now have in place a set of stable and comprehensive standards that reflects all major market developments and supervisory developments impacting the insurance sector. The second substantial achievement was the adoption of ComFrame, the first global framework for the effective and globally consistent supervision of internationally active insurance groups, a few of which I know are in the room today. In response to an increasingly globalized insurance sector, we now have, for the first time, a globally agreed set of supervisory requirements tailored to the activity and size of internationally active insurance groups. This will help supervisors around the world to address group-wide risks and avoid cross-border supervisory gaps. Thirdly, we adopted the holistic framework for assessing and mitigating systemic risk in the global insurance sector. This includes, firstly, an enhanced set of supervisory policy measures that have a particular macroprudential focus, as well as an annual global monitoring exercise by the IIS designed to help with the early detection of potential systemic risk and a collective discussion among supervisors on an appropriate response. And last but not least, of course, Abu Dhabi also saw a significant step forward in the development of a global insurance capital standard, or ICS, the quantitative component of ComFrame. The ICS aims to support a common language for supervisory discussions of group solvency of internationally active insurance groups and to enhance global convergence among capital standards. The ICS has been a multi-year journey with 6 years of annual field testing since 2013. And with the agreements we reached last month, ICS version 2.0 will now enter a 5-year monitoring period, during which it will be used for confidential reporting to group-wide supervisors, discussions in supervisory colleges, and further analysis by the IIS. Stakeholder feedback, in particular from participating insurance groups, will remain critical during this period, and this, together with feedback from supervisors, further technical analysis, and an economic impact assessment, will allow us to further refine and improve ICS prior to its implementation as an international standard. So as you can tell, 2019 was a busy year with major accomplishments, but this is not the time for the IIS to be slowing down, because not only must we agree and shift to an important focus on implementation of these agreed global standards, but we must also look to the next horizon. Earlier this year, we set our vision for the next 5 years with the approval of our 2020 to 2024 strategic plan. We've identified important trends and developments, including, importantly, fintech, but also cyber risk, climate risk, issues of conduct and culture, and the challenges of sustainable development, all of which have the potential to reshape the insurance sector in which we all operate in the coming years. Which brings me to fintech, the focus of this afternoon's discussion. There is no doubt that fintech brings significant potential for social and welfare benefits, and I echo the sentiments of the distinguished speakers who opened today's proceedings. This is an opportunity that we, as a global community of insurance supervisors, are keen to help enable. It's incumbent on us to be part of the solution to sustainable development. In doing so, we recognize the need to work in collaboration with our partners, including in the insurance industry, which is why I was very glad to see the recently published paper by the Insurance Development Forum, the IDF, an industry initiative, on how technology can help bridge the protection gap. The paper provides important examples of how technology can facilitate the expansion of product innovations, such as the use of parametric insurance to cover weather-related hazards. The paper also highlights how the increasing volume and granularity of risk-relevant data, combined with improvements in analysis and modeling, may enable ever swifter, more accurate, and more cost-effective insurance products to provide vital post-disaster liquidity. A critical question highlighted by the IDF is whether the existing regulatory structure welcomes new players and partnerships, such as mobile network operators, commercial satellite companies, and tech firms. to allow for innovations needed to overcome barriers to closing the protection gap, a topic I hope we can return to later this afternoon in the panel discussion. This is a challenge that the IIS takes very seriously. Around the world, 1.7 billion adults are underserved with respect to financial services, including insurance. In many countries, fintech is already helping the unbanked and small businesses to access finance, from rural households in China who can invest in a money market fund from their smartphone, to retailers in India who can accept new forms of payment from their customers, to smallholder farmers able to insure themselves against climate risks for the first time. In advanced economies as well, consumers stand to benefit. New market entrants can offer innovative services more efficiently than ever before due to fully digital business models and the use of new technologies. Greater competition and diversity of providers can create a more efficient and resilient financial system. Incumbent insurers are rapidly adapting to the new environment with various strategies ranging from partnerships with insurtech firms to in-house innovation. Insurance is, at its core, a data business. So unsurprisingly, it's clear that digitization of insurance models has the potential to deliver significant dividends. Efficiencies in the insurance value chain, enabling better risk assessment and product innovation, and leading to increased customer choice and greater access to financial services. At our annual conference in Abu Dhabi last month, Dr. Moses Cheng shared with us how the Insurance Authority is seeking to maximize these dividends by supporting insurers in Hong Kong to step up the pace of adopting insurtech in nearly all stages of the life cycle of insurance products. However, these innovations are not without risk. The extensive disruptions to the traditional models that we are witnessing could unintentionally result in poor outcomes for customers and may expose the sector to increased vulnerabilities such as heightened interconnectedness and cyber risks. In responding to these developments, whether as policymakers, supervisors, or industry participants, we all find ourselves confronted with the same question, namely, how do we strike an appropriate balance between risk and benefit, disruption and dividend, considering the scale and pace of technological innovation? For our part, the IIS is accelerating our examination of how best to support our diverse membership to respond to this question through multiple initiatives and platforms. So I'd like to share with you a brief snapshot of those. First, we leveraged fintech expertise from across our membership by establishing a virtual fintech forum. The forum provides a platform for experts from supervisors to share practical experiences and insights on a range of technological innovations impacting the insurance sector, such as the use of alternative data, smart contracting through distributed ledger technology, P2P insurance, and the impact of technology on supervisory tools and resources. To give an example of how this works in practice, recently the Dutch Central Bank shared in the forum their newly published guidance on the responsible use of artificial intelligence. Members were then able to consider the application of these guidelines to a number of practical scenarios, such as the use of artificial intelligence for fraud detection in claims handling, and more granular pricing in disability and health insurance. Similarly, in 2018, the Monetary Authority of Singapore introduced a set of principles to promote fairness, ethics, accountability, and transparency in the use of AI and data analytics in finance. The sharing of this in the FinTech Forum has then contributed to consideration of these issues more broadly amongst the global insurance community. Looking ahead to next year, the forum will look more closely at the potential impacts of AI and machine learning and adjacent technologies such as telematics on the work of insurance supervisors and what it means to the application of our insurance core principles. The forum also intends to reach out more widely to a larger community of experts, such as through innovation festivals, visits to innovation labs, and other similar platforms focusing on insurance-specific innovations to help our member supervisors broaden their surveillance capabilities and remain abreast of fintech developments. Second, the IIS invites a diverse range of insights from technology, academic, industry, and consumer stakeholders through digitally themed events. So, for instance, our annual conference in Abu Dhabi was organized around the theme of supervision in a digital era. Earlier in the year, we convened a workshop with the Financial Stability Board's Financial Innovation Network in London, where we explored a range of specific developments. One that comes to mind in particular was a look at the UK Financial Conduct Authority and how it is using a thematic approach to the use of sandboxes by encouraging sandbox participants to focus on solving specific consumer-related challenges, such as financial inclusion and protection gaps for vulnerable customer groups. A particular focus for the FCA is the use of data for improved customer outcomes. Third, the IIS's working groups continue to look at developing supervisory guidance on the risks, trends, and opportunities posed by fintech. For example, the IIS's Market Conduct Working Group, which Stephen, I know you participate in from the Insurance Authority, recently published a draft issues paper on the use of big data analytics in insurance, with a specific focus on the potential risks and benefits for customers associated with the increasing use of algorithms and advanced data analytics by insurers. The draft paper acknowledges that big data analytics can result in a number of benefits for insurers and customers alike. On the other hand, the paper cautions that the complexity and opacity of algorithms could require supervisors to clarify their expectations on appropriate levels of transparency and ensure accountability for customer outcomes resulting from algorithm-based decisions. In this regard, we've seen some helpful developments. In addition to the Dutch and Singapore examples I mentioned earlier, for example, the French Law for a Digital Republic, enacted in 2016, obliges fair, clear, and transparent disclosures to customers on contractual decisions based on algorithms. More recently, in 2019, the European Commission published its ethics guidelines for trustworthy artificial intelligence, and the European Insurance and Occupational Pensions Authority, EIOPA, set up a consultative expert group on digital ethics in insurance. On the need for supervisory guidance, we've seen a few common themes emerge that are equally relevant to our members from developing and developed jurisdictions. And those are data protection and the fair and ethical use of data, as mentioned, the entry of third-party cloud providers, and other non-traditional players such as big tech companies into the insurance sector, and affordability and inclusion challenges. The IIS recognizes that insurance supervisors have a significant role to play in facilitating innovation for greater societal benefits while ensuring prudent, fair, and responsible use of technology in the interests of policyholders. To achieve this, it will be important for our members to strengthen outreach with data protection and competition authorities, data scientists, consumer advocates, and industry experts to form collective and coordinated responses to these overarching themes. And lastly, we also recognize the importance of working with our peers in the other standard-setting bodies and the FSB. It is clear that innovation is not unique to insurance by any means, and we will work to explore cross-sectoral issues. And we welcome, for instance, the release yesterday of FSB papers on big tech in finance, market developments and the potential financial stability implications, as well as a paper on third-party dependencies in cloud services, considerations on financial stability implications, to which the IIS contributed an insurance sector perspective. So in closing, I'd like to return to a question we asked the audience last month at our annual conference, which was, how should supervisors respond to supervising in a digital era? Interestingly, the number one answer was build skills and capacity. And that is why we are here today, and that is why the IIS values the important learnings from our regional members and our stakeholders, and I look forward to exploring these issues with you further. Thank you very much.